Hi, welcome to today's video. Bank of America reported a better than expected quarterly earnings. Similar to Goldman Sachs and JP Morgan, earnings were negatively affected by the high volatility in the financial market, which led to weak trading results and banking fees. These losses were more than offset by the increase in net interest yield, a key metric of profitability for banks, and the increased growth in lending. The numbers weren't as great as JP Morgan's, but were better than Citigroup's, who had the weakest lending growth of the three banks. The bank's earnings and the positive results from their retail sectors give an impression of solid growth in the US economy for the first quarter. A strong labor market and okay hourly earnings growth all indicate that the economic growth will continue. The long-term interest rates have fallen and indicates a weaker profitability for banks, but can increase the activity in the housing market, which in turn increases lending growth. In Europe, the Dutch banking corporation ING was in talks with the German bank Commerzbank of a takeover. Previously, there had been talks about a merger between Commerzbank and another German bank, Deutsche Bank. But the ECB was skeptical about that merger because it wouldn't solve challenges in the EU banking sector. The ECB believes that the EU banking sector has high cost inefficiencies, lack of digitalization, and high fragmentation in the sector. The ECB wants the banks in the EU to be able to lend across border. As of today, this isn't the case. German companies are lending from German banks, and Dutch companies are lending from Dutch banks. A cross-border merger like the one ING and Commerzbank are in talk of will be preferable over Deutsche Bank and Commerzbank merger for the ECB. Though the EU still hasn't established its own banking union, thus the risk of the non-domestic banks to relocate out of the countries they are doing business with is higher in bad times. The economic indicators released from China were better than expected. Fixed asset investments for the first quarter increased by 6.3% year-on-year from 5.9% in the previous quarter. The increase was mostly due to cost increase. Still, the numbers showed a positive development in investments in infrastructure. Also, housing investments were positive, though the investment in manufacturing sector had declined due to the ongoing trade conflict and slower global economic growth. Retail sales year-on-year had increased, but consumer spending slowed to 4% year-on-year in the first quarter, from 5% in the fourth quarter. And that's it for today's video. Check the video description for more details. Thank you for watching.